Hey everybody, welcome back to the Optometry Money Podcast, where we're helping ODs all over the country make better and better decisions around their money, their careers, and their practices. I am your host, Evon Mendrin, certified financial planner and owner of Optometry Wealth Advisors, an independent financial planning firm just for optometrists nationwide. And thank you so much for your time and energy in listening to this podcast. We are about 44 weeks in, and I am amazed anyone listens to it at all, but I truly appreciate, I know you listening. I know you are taking time out of your day to listen to this, and I do not take that responsibility lightly. So appreciate your time, and for every guest that has been on, I appreciate your time and energy and wisdom and adding on to this podcast. And on today's episode, I want to give you a bit of an optometrist guide to financial advisors and talk through 5 questions that you need to ask when hiring a financial advisor or financial planner. And a reason I want to highlight this topic for you is because there's a story I've heard far too often. And I've seen this recently in some of the optometry-specific Facebook and social media groups I'm in. I've heard this come up over the years. And the story is something like an optometrist saying, hey, I met with a financial person trying to get some financial advice. They suggested throughout the process that I buy XYZ permanent insurance policy. And now after reading a bit more about it, talking to some peers, I'm realizing it wasn't the best fit for me. So what do I do about it, right? How do I unravel that? And maybe you've seen this too with some of your peers, and this is something that I've seen happen just far too often, is a relatively highly paid professional like an optometrist talks with a financial person looking for some unbiased guidance and some advice around what to do with their finances, student loans, investments. And what ends up happening is there's just a product sold at the end of it, and which may or may not be the right product for that person. And along with that, I look at social media. I look at especially platforms like TikTok, which is maybe the worst of all of them. And I see just outrageously bad information or just outright false information about all kinds of financial topics, taxes, cash flow, the way retirement plans work, the way retirement planning and research works, all with the goal of selling you XYZ permanent insurance policy or XYZ really expensive investment. And the information is, I just feel like recently has just sprouted up out of nowhere. I mean, it is everywhere. I feel like I'm seeing it everywhere, and it's incredibly bad information. And so for the longest time, there's been a big problem with financial services. It's too hard to know what type of professional you should be working with. Who does what and how do they do it? I think of times I've been to networking events in the past, and 5 financial professionals would stand up, all working in different companies, different business models, doing different things, but they all sort of give the same spiel about what they do, right? They all sort of sound the same. It's really hard to know who does what. And when you think back to the history of financial services, all of it came out of product sales, selling individual stocks, selling mutual funds, selling insurance. And eventually things developed to make that better. Financial professionals eventually were able to sell all financial products, investments, and insurance policies, which was positive because if you're only selling insurance products, the risk is that every problem needs to be solved with an insurance product, right? So that was a good development. Eventually, brokerage services, the trading, the buying and selling of stocks and different investments went digital, went online. Thank you, Charles Schwab. And you were able to do that yourself online, which really brought down trading costs. Eventually, people went from selling individual stocks or selling individual investments to more holistically managing portfolios. And then eventually, out of this, advisors started offering true financial advice, separate from product sales, and advice around all the different aspects of your finances, cash flow, debt, taxes, investing, estate planning, etc. So there are advisors, even if it's not the majority of all financial services professionals, there are advisors in advisory businesses who are really providing solid advice and guidance for families across a broad range of financial decisions in your life, but still so much of financial services is rooted in product sales. And we haven't, as an industry, as a profession, made it easy on you to sort through it all as an optometrist. All the time we seem to be making up new terms to describe what we do and different titles and different service models. And too often I think financial services relies a lot on complexity to make their jobs more secure. So to help you sort through all that and to find a financial advisor that's the best fit for you and what you're looking for, and to try to sort through to wade through the weeds here, I want to talk through 5 questions. 5 questions that you need to ask when you're looking to hire a financial advisor. So let's dive in. Number 1, the first question you should ask is, who do you work with? Simple question. And you want to have a feel for who that advisor or professional or that business is the best fit for or does the most work for. For example, I work specifically with optometrists all over the country, and I've built my firm entirely around optometry and around your career decisions, around your lives, and around your practices. And I continue to do that as I learn and get feedback and improve the service. Others work incredibly well with retirees or near retirees. Others with tech professionals or general business owners or physicians or general practitioners that work with anyone. And that's probably the greatest majority of advisors. So you just want to have a feel for, does that service and does that business fit your own life situation and career decisions? Number 2, what is your background? So what is his or her experience? What licenses does she or he have? Designations like the Certified Financial Planner, the CFP, or other specialty designations? What are the actual titles? Is it financial advisor or financial planner? And are they licensed to be called that? Or registered representative or agent? I'm going to talk more on this later, but what titles do you see on the business card or on the website? The CFP, in terms of designations, the CFP, the Certified Financial Planner designation, has sort of become the standard benchmark for financial planning technical chops. Unfortunately, the actual licensing requirements to be a financial advisor aren't that difficult and don't, in my opinion, from what I remember, don't really teach you much about how to provide high quality financial advice across a broad range of topics in your life. And it's much different from what you experience as an optometrist, going through school, having to get licensed. It is substantially different from that. So if you see that someone has a CFP, it usually at least tells you that there's a base knowledge in broad financial topics that they have an understanding of, that they have a grasp of. Taxes, cash flow and debt, estate planning, retirement planning, etc. So at least there's a base knowledge, a base set of technical chops to give you advice in these areas. So that's something that the CFP will tell you. The CFP also has an additional set of ethics to follow, an additional fiduciary standard, which I'll talk about that a little bit later. So there's some extra stuff there that sort of holds CFP designees or certificates accountable. One can argue whether they actually follow through on that, but at least you'll know that there's a base technical competency there. Some extra credentials are helpful too, but there's also a lot of fluff letters out there that don't really mean a whole lot, but they fill the space after someone's name. A few extra credentials that are legitimate are the CSLP, the Certified Student Loan Professional. That's something I hold. It basically teaches you about the mastery of student loan planning. That's something that unfortunately is not really taught for most financial advisors. That's not something most study and most are familiar with. I personally didn't know anything about student loans until I went through that curriculum and started working with student loans directly. So that was a huge help for me. The enrolled agent, EA, is actually a federal certificate for income taxes. You're going to see a lot of tax preparers actually have this, right? They may be CPAs or they may be EAs, enrolled agents, but you'll see other financial advisors carry this too. The RICP is the Retirement Income Certified Professional, which is, as it sounds, specific to retirement planning. So if that's where you're at in your career, maybe you're looking for that. And the CHFC, the Chartered Financial Consultant, sort of an older alternative to the CFP, but I think that's helpful as well. That's not to say if you don't have these letters that you are not competent. I know people who've been in this business, in this profession for a long time who are quite competent, but just didn't get any of these. But these designations tell you a lot as well. So what is your background? What is that professional's experience? Where do they come from? And what designations do they have? And what licenses do they have? Number 3, what are your services and client experience? So what are the actual services that you're going to be receiving if you work with this professional? And what is the ongoing experience that you should look forward to? Will it end in a product presentation, or will you actually be getting financial advice? You want to know what you're paying for, and you want to know what to expect. What are you actually paying for? And if someone says you're not paying for anything, it's free, it's covered by the insurance company, whatever, like if someone tells you that you're not paying for their service, someone else is, that's a big red flag. Someone's always paying for something. There's always money being exchanged, right? So you want to know, what services are you expecting? What services are you going to be receiving? Is it going to be focused on certain topics only? For example, investment management or student loan calculations? Is it a broad service covering all the different aspects of your finances as an optometrist, especially as a practice owner or as an independent contractor? Is there coordination and communication with the other professionals in your life? CPAs, EAs, attorneys, insurance agents? Is there an ongoing service model throughout the year? Or is it a short-term engagement lasting only a certain time or a certain amount of months? Maybe it's hourly work or in person, or is it virtual? So you just want the actual service you receive to match up with what you're looking for. Whether it's a specific product, which is fine, or ongoing advice and guidance, or short-term advice and guidance around a specific topic. So think about whether you're looking for short-term advice or ongoing advice. Think about where you're looking for a specific product or not, and just try to align that professional service model with what you're looking for. That's number 3. What are your actual services and client experience? Number 4, how are you paid? How are you paid? This is a big one. This is going to tell you a lot about the service model. It will probably tell you a lot about how what their actual titles are, what the work is going to be for you. This really does tell you a lot. So this is something you'll want to know about. How is that professional, how is that financial advisor compensated? Is it a commission from a product sale, or do you pay the advisor for services? Again, if someone tells you a service is free, that's not the case. Money is changing hands somewhere. Whether it's by a commission that you are paying or by the premiums you are paying and that professional receiving a commission, or whether you are paying for the services directly. There's always a price to be paid. So how is that professional paid and how is that business paid? In general, you can think of financial services on a spectrum, right? So you sort of think of all the financial services professionals on a spectrum. On the one side of that spectrum is the world of product sales. And that's insurance products, that's mutual funds, that's any other financial products being sold. Often this is done where the professional is working with a large financial company like the Principal Financial Groups or New York Life's or even Edward Jones of the world. The titles that you're going to see on the business card are going to be financial representative or agent or registered representative or broker. Less often you'll see other creative titles that really don't mean anything, but something like tax-free income wealth creator or something like that to sort of create some sort of credibility around something. By law, these professionals are not licensed to call themselves financial advisors. That doesn't mean the work they do is any less legitimate but they are simply not financial advisors, and their business is not providing financial advice. Their business is to provide a product or a specific product. And so the job of that professional is to sell financial products, to provide a financial product for you, whether it's insurance, mutual funds, whatever it is. They are paid by commission from the companies they represent, or if they're independent, it's from the insurance companies. And that's not necessarily bad. A commission should be expected if someone is providing a product. That's something that should be expected. And people do need many, not all, but many of these products, right? People do need term life insurance at a minimum. People need disability insurance, umbrella insurance. So there's a need for these products, and people and businesses have to provide them as long as you're aware that that's what's happening. All right, so that's on one side of the spectrum. Product sales, financial representatives, registered representatives, agents, or brokers, and they are paid by commission. On the other side of that spectrum is going to be the world of purely financial advice. And the titles that you're going to see on that person's business card is going to be financial advisor or financial planner, or sometimes wealth advisor, or the really technical term, the regulatory term is investment advisor representative. So these advisors are paid directly from the client, you the client, for their services. The jargon term that we use a lot for this type of business model, working this type of financial advisor, is fee only. And that just means that the advisor is paid only by the client for their services and doesn't have a third party paying commissions. And there's no expected product sales. This is where my firm lands. It lands on this squarely on this side of the spectrum. I own a fee only financial planning firm. Clients pay me directly for services. There's no product sales happening, right? So this is where my services land. And there's a variety of ways that you can pay a fee-only financial advisor. Many charge a flat fee or a flat annual fee broken down monthly for their services. This is my own business model. I just have a annual fee that's broken down monthly, so a flat monthly fee. This is the way I felt made the most sense. It was the most transparent. It was simple. It was straightforward. The optometrists and families I talked to felt like this sort of business model made sense for them, especially where the practice is often the biggest asset on the balance sheet, or they're early in your career and there's just not a lot of assets to manage. So I felt like that was just the way that made sense for me. Many more advisors charge a fee based on a percentage of assets under management. And that's usually a decreasing percentage of assets or decreasing percentage as assets increase. So some people I think get this wrong, where they say it's like 1% forever, on whatever amount of assets that's being charged. That's not usually how it works. Typically, you're going to see something like you'll pay 1% of the asset of like the first 500,000 of assets, then you'll pay 0.8% on the next $500 of assets, then maybe 0.5% on the next $500,000 of assets, right? So there's a tiered structure so that as the assets grow, the actual percentage fee that you're paying decreases. It goes down. That's an AUM-based fee, an assets under management-based fee. Others do hourly, so they may just work with you hourly. I have this as sort of a service available for specific situations, but some firms, some planners actually use this specifically. Others based it on complexity, so there may be a certain fee for families without business ownership. Then there's maybe an additional fee increase for business ownership, and there may be an additional fee increase for being married or whatever, or having stock compensation or something like that. So they may have a formula based on complexity. And then there's just other formulas out there, some based on net worth and income, whatever it may be, right? So there's sort of a variety of fee-only advisors in the way that they charge and the way that you can pay them. Is there one that's better than all the others? I don't necessarily think so. Again, I'm on this sort of flat fee per month or per year business model. I think that makes sense. I just like the simplicity of it. I think it's so straightforward and transparent. But you just need to find the way of paying for a service that you're comfortable with and that fits your life situation. I think what you want to find the most is just transparency, right? You don't want to find an overly complicated or complex situation where you don't know what's going on and you don't know how you're paying them. You don't want to find yourself in a situation where you don't really understand how that fee is being calculated or paid. Just find transparency, and hopefully that advisor can explain it clearly to you so that you understand. So that's on the other far end of the spectrum, is this fee-only section where that financial advisor, they're going to have that licensing, that title, financial advisor. You're just charging them for their services. And somewhere in the middle is this sort of gray area where it's a mix of the two different sides of the spectrum. So the jargon term we often use here is fee-based, not to be confused with fee-only. Of course, there are those endless terms we keep making up, but a fee-based business model is where the advisor may offer services on a fee-only basis. So they may have a financial planning fee, or they may manage certain accounts with an asset management fee, so an AUM fee. But they may also provide other products, so term life insurance, disability insurance, whatever other insurance or mutual funds, right? So it's a mix of both of these different business models, somewhere in between here. And I know great advisors who want to do this mix of a business model, this hybrid business model, because they just know their clients need the insurance products, the term insurance products, and they want to be able to do it well for them. But I've also seen, especially in larger companies, where this business model leads to sort of just people gathering assets and charging money on it and not really providing a whole lot of services, or the financial planning is just sort of thrown in the beginning in order to lead to that product sale. You also don't really know where in the conversation you're talking with someone in a fiduciary relationship to you, which we'll talk about a little bit later, and not when one hat comes on and then comes off and then the other hat comes on. So it's a little bit of a gray area. So you just consider your own needs and the type of relationship you're working for, and then find the method of payment and the service model that makes the most sense for you. But I do want to say, why is this important? Why is the way that a business or advisor is paid important? Because incentives matter. Incentives matter deeply. They are super important. I've worked across all these business models. In my earliest years, this is my 9th year of practicing. In my earliest couple years, I started out in one of those big financial companies that sort of did everything. They sold insurance, they sold their own mutual funds, they also had sort of these financial advisory services. And so I've seen all of the wholesale talks, I've seen all of the sales training, I've seen how the financial products work, and I've seen quite clearly in my experience that incentives matter. The way that financial professionals are paid can absolutely have an impact on what's suggested to clients, especially when product sales are involved. And just from my experience and what I've seen, when your ability to continue working for the company that you work at and to stay on contract and to provide food for your family, when your ability to do all that is determined by you selling that company's financial products, and when all of your training is around how to do that, the incentives absolutely matter. There's a huge conflict of interest. And it's no wonder where so many permanent life insurance policies and annuities are sold, especially when they're not the best fit for that situation. There's a strong financial incentive to do so. Now, I do want to be clear. Anytime money exchanges hands, there's a conflict of interest. Doesn't matter, especially around financial advice, especially anything related to your money. There is a conflict, right? But in my experience, that conflict is never stronger than when there's a product to be sold and commission to be made. Now, I clearly have a biased view here. This is my view. This is also my podcast, so I'm going to share that. But my view has been formed through a lot of years of seeing all this different stuff and experiencing all that and going through that training myself. Especially the biggest problem to me is especially when you expect to get unbiased guidance, when you're looking for that, but the reality ends up different. You end up down the sales funnel into a product sale. And it's a lot like patients going to, 1-800 contacts, expecting to get professional care from a highly trained optometrist, and then wondering why they left the site buying cheap contacts that are actually terrible for their eyes, right? So just keep an eye on that. How that professional and how that business is paid absolutely matters. There are conflicts of interest, and you need to be aware of that. Also, again, red flag, please keep this in mind. Anytime someone suggests to you that the advice or financial planning is free or is thrown in any way, this should make you suspicious. They should raise up the antenna in your head to say, wait a minute, what's going on? Because that means that is not the actual service they're providing to you. Something else is. Nothing is free. There's always payment somewhere. Money is always changing hands. So, and you do often get what you pay for. So in all of this, look for transparency on how the money is changing hands. So that was number 4. How are you paid? Number 5, are you a fiduciary at all times? Now, fiduciary is kind of a huge jargon term that sometimes doesn't mean anything anymore because I see it thrown around all the time. Fiduciary, fiduciary, fiduciary. So what does that even mean? All right. Well, if you are if a financial planning firm is a registered investment advisory firm, that's the legal term for it. And if I am a licensed financial advisor, or again, that legal term is investment advisor representative, I have a fiduciary duty to you when I'm making investment recommendations, right? Or when I'm providing advice to you. I have a legal fiduciary duty to you. And what that means simply is that an advisor has a legal duty to act in your best interest and to limit conflict of interest where possible and to disclose them clearly when that's not possible. Now, this doesn't in any way guarantee that the professional you're working with is honorable and ethical in every way, but it does give some legal teeth to it. So that is what a fiduciary duty essentially is. It's someone required to act in your best interest. Now, that definitely seems like something that almost every financial professional should do, but it's sadly not, unfortunately. Whenever someone is acting as a broker or an agent, whenever they're acting in a sales role, that professional is representing his or her employer. They're not representing you. And the standard of duty to you is called suitability, meaning that whatever is sold to you just has to be generally suitable for your situation. The best way I've sort of heard and thought about to sum this up is that if you are going for unbiased advice on how to eat healthy, how to have a healthy diet, would you go to a nutritionist or a butcher, right? You're likely going to go to a nutritionist. However, if you want to just buy meat, you're going to go to the meat specialist. You're going to go to the butcher because that butcher is the expert in his or her craft, right? So that's what a fiduciary duty is. And when you're asking someone that, you want to make sure that that person has that legal fiduciary duty at all times. And if not, you want to know when to expect that that's not the case. When does that hat come off and the suitable product sales hat come on? And, again, sometimes like the CFP designation has its own sort of fiduciary responsibility. Some associations like the XY Planning Network, which is an association, a network of members of financial advisory firms, they sort of have their own fiduciary, declaration. Those aren't legal requirements, though. Those aren't legal duties. So, and again, I see this thrown around a lot, but that's something you definitely want to see and definitely want to ask. You want to know what duty does your professional have to you, and to be comfortable with that answer, right? So those are your 5 questions that if you're going to search around, if you're going to interview, if you're going to look for financial advisors, you want to have these questions in mind. Number 1, who do you work with? Number 2, what is your background? Number 3, what are your services and client experience? Number 4, how are you paid? And number 5, are you a fiduciary and is it at all times? So let's talk about my sort of suggestions on all of this, right? What are sort of my thoughts on all this? I've worked across these different business models. I've seen a lot of bad and I've seen a lot of good. I've seen the bad sales training and the pitches and the wholesaler talks and this life insurance product can solve every financial issue in your life. I've seen all those conversations, but I've also worked in a phenomenal independent financial planning firm, and I've started one of my own, and I've seen the power of good, unbiased financial advice and guidance. So what are my thoughts on all this? Really just think about what you're looking for. If you are looking for a very specific financial product, if you're just going to look for a life insurance or disability insurance or umbrella insurance or anything like that, right? If you have something specific in mind, go work with an agent. Or really, in my recommendation is go find an independent broker, right? Not someone that's captive to any one company, but someone that can look throughout a whole bunch of different carriers and figure out what the best product is for your situation. So look for someone that does that. And the fact that they receive a commission is perfectly fine. It should be expected as long as you are aware that's happening, as long as that's what you're looking for. But if you're looking for financial advice and unbiased guidance and planning around your finances, search first for a fee-only financial advisor that works with an independent firm. All right, that's where I would start my search. I will say there are knowledgeable professionals in any business model that truly want to do well for people. But searching for a fee-only financial advisor gives you the best chance, in my opinion, of having an unbiased relationship. And of course, I am biased here, right? This is how I've taken my own career. This is how I've arranged my own business. But I've done that through experience. I truly believe that financial advice should be completely separate from the sales of financial products. That is something that is a hill I will die on. I strongly believe that, right? So if you're looking for whether it's short-term or long-term ongoing financial advice that is unbiased guidance around your financial decisions, search first for a fee-only financial advisor, hopefully one that works with an independent firm. And I would also suggest looking for a certified financial planner, CFP. And any extra specialty designations that fit your specific situation are helpful. Just look for someone that has the expertise, the focus, the business, and the services that fit what you're looking for and fit your specific needs as an optometrist. And again, is there a best way to pay for that fee-only financial advisor? I didn't think so. I don't think so. Just choose the way that fits your life situation best and your own preferences. Mine is a flat fee each month for all my services, and that just seems the most simple, transparent way. It seemed to make the most sense for the families and optometrists I work with. But ultimately, it's up to you. Where do you find them? Well, you can look at my own website, www.optometrywealth.com. You can learn all about me and how I serve optometrists nationwide. You can schedule a conversation with me if you'd like. So check me out. Check out my website. Reach out to me if you have any questions. You can also go to a few different websites. One is the National Association of Personal Financial Advisors, NAPFA, N-A-P-F-A. I think it's napfa.napfa.org, but that is an association of member firms and advisors that are fee only, that have that business model. Another website to look through is the XY Planning Network, and I think that's just xyplanningnetwork.com, but Google will be your friend here. That's another membership group of financial advisors and businesses that have fee-only business models. And ultimately, if you find the answers to these questions, as long as you are aware of the answers, as long as you have transparent answers, information that's clear and transparent to you, and you're comfortable with the answers, and find someone you trust first, then go for it. Because ultimately, it's going to come down to someone having the services and experience and expertise that fit your needs, and someone you trust and a business you trust. Having said all of that, there are some red flags that I just want to highlight, just some things for you to watch out for. Number one, please do not take financial or tax advice from TikTok, and be very, very, very cautious about really anything you see on those social media channels. Anytime someone is suggesting to you that a single product, like a life insurance policy, will solve basically all of your financial issues and all of your retirement planning issues, that's a red flag. Anytime someone is proposing a life insurance policy, a permanent life insurance policy, as a way to build wealth, especially instead of other actual investment assets, retirement accounts, investment accounts, stocks, bonds, private businesses or private practices or real estate. Anytime a permanent life insurance policy is put in front of you first and foremost as a way to build wealth, just watch out for that. That is a huge red flag. So please just keep that on your mind. The other thing I want to have you watch out for is watch out for companies that really just are sort of asset gatherers, and they may look like they have a family business model. They may charge assets under management for managing an account, but there's really no advice or service provided outside of just gathering your assets and having a home office provide an investment model. So just watch out for that if that's what you're looking for. If you just want that kind of investment management, maybe that fits your needs. But if you're looking for something a little bit more than that, just keep an eye on that. Also watch out for overly complicated portfolios just for the sake of complexity. What you don't want to see is like 30 mutual funds that can just be easily replicated with one index fund, right? Just having a huge amount of different investments for no particular purpose other than just having a complicated portfolio that looks like it has to be managed by someone. Just keep an eye out for those. I mean, you as an optometrist, as a relatively high income professional with a high income potential, you're often a target for some of these things. So just keep that in mind. Watch out for that. And I don't just want to sit here and throw shade at other financial services professionals or any peers. I mean, there are a lot of pros in any business model that just want to do right by clients. But I've just seen too much go wrong in financial services where the needs of the clients, the interest of the clients weren't put first. And I've seen too much of that. This is, again, why I strongly recommend starting first. If you want an advice relationship, if you want guidance around financial decisions, find a fee-only financial advisor first. So hopefully this is all helpful as if you are thinking about hiring a financial advisor down the road, to give you at least some questions to ask or a framework to think about how one is different than another. And if you have any questions on any of this, feel free to just reach out to me. My email address is Evon, EVON @optometrywealth.com. You can schedule a time on my website if you just want to chat about how financial services works and how certain business models are different than others. I am more than happy to do that. And again, really appreciate your time and listening. Hopefully this is helpful, and I will catch you on the next episode. In the meantime, take care.
Want more resources to help master your money? Check out the Education Hub on Evon's website at optometrywealth.com. Evon Mendrin is a certified financial planner and owner of Optometry Wealth Advisors, a California registered investment advisor. All opinions of Evon and his guests are their own. This show is for informational purposes only and should not be relied on for specific investment, legal, tax, or other decisions. Clients of OWA may own securities mentioned on this show.